start today's symposium with a conversation with Monsieur Denis Beau, Deputy Governor of the Banque de France. Those of you who've been following events will know for the last year, 18 months or so, the Banque de France has been leading the way in many respects in exploring and piloting possible uses of digital tokens and the like for trading wholesale assets. And we're very fortunate and delighted to welcome the Deputy Governor, who has agreed to share some of the experiences and some of their thoughts. So with nothing more from me, I welcome and hand over to Deputy Governor Denis Beau. Floor is yours.
Thank you very much, Philippe. Good morning to everyone. The health crisis has sped up the transition towards more digital ways to consume and pay, and it has shown the ability of the ecosystem for retail payments to adapt. Less apparent changes have taken place so far for wholesale payments. This doesn't mean that wholesale payments cannot be faced with the digital push underway in the retail space and will not be confronted with their associated challenges such as safety, accessibility, competition, or sovereignty. New tradable assets have emerged, such as security tokens, stable coins, or utility tokens, based on the use of new technologies such as distributed ledger technologies, which may alter the functioning of market infrastructures through which wholesale payments flow. For central banks, as providers of the dominant settlement asset in wholesale transactions, addressing those issues means questioning and possibly reconsidering the way they actually make available their settlement asset for wholesale payments. In other words, at the digital age, should we provide central bank money to financial intermediaries and possibly to other players for wholesale payments in new ways and forms, including in the form of a wholesale central bank digital currency, to ensure that central bank money keeps its dominant and stabilizing role in this critical payment market segment for financial stability. To share with you a few thoughts on the answer to this question, I will focus my remark this morning on the opportunities and challenges I see for wholesale CBDC. And the first lessons I draw from experiments we have been running at the Banque de France with market participants in this area. It is not a matter of controversy for that digital innovation in the financial sector and the use of DLT-based innovative technologies are creating a wealth of opportunities to improve the functioning of market infrastructures. In that context, the provision of a digital form of central bank money could provide positive contributions and help materialize those opportunities in supporting efficient and safe settlement processes in two ways. First, facilitate integration and STP of clearing and settlement activities. It is indeed essential that asset tokenization does not halt the trend of the integration of financial markets by leading to disorderly approaches and heterogeneous adaptations of market infrastructures and their clearing and settlement activities. Furthermore, we could face a situation where liquidity becomes insulated, thus threatening the settlement finality of transactions and complicated liquidity management. In front of this risk, a wholesale CBDC could play a unifying role for various systems, just as target services did for the current European market infrastructure landscape. This would obviously be valid within a single currency zone, but also for cross-border payments, one of the G20 priorities. Second way, minimize settlement risk. The tokenization of financial instruments raises the question of the tokenization of the settlement asset, the so-called cash leg. Such a question should not lead to downgrade the requirements vis-à-vis the safety of settlement, but on the contrary, it should invite us to revisit the form in which the most liquid and risk-free asset to settle financial central banks, as financial transactions, central bank money, is made available. From that perspective, a wholesale CBDC is a way to put tokenized central bank money on the ledger, protecting beneficiaries of transfer orders, notably against counterparty risk, which had been nearly eliminated from current securities settlement procedures. It could also be an answer to the risk associated with the use of private assets for settlement. In particular, stable coins backed at par with central bank money, which may expose central banks to a possible loss of control over central bank money issuance and management. The observation that a wholesale CBDC would be clearly beneficial from an integration and settlement risk perspective may explain why central banks have expressed so far fewer concerns for providing it to the market compared to a retail CBDC. But this does not mean that its implementation would be straightforward. Actually, such a move requires addressing a number of issues, and I would like to stress two of them of significant importance from the public policy standpoint of a central bank. The first challenge relates to the choice of the technology that would support the deployment of a wholesale CBDC and to its scalability features. Blockchain technologies are evolving rapidly. Distributed ledgers can be permissioned or public, account-based or token-based, which has consequences from an operational, interoperability, and control perspective. DLTs remain yet to be tested for large-scale applications in order to be mature enough to be used in a financial context, which would imply to ensure interoperability with both conventional systems and all other DLT systems. When designing a wholesale CBDC, central banks should also, and by any means, guarantee technological neutrality and make sure that the DLT-based solution is underpinned by strong governance and includes adequate processes conducive to the proper production of information data through the consensus mechanism. Operational resilience, cybersecurity, protection of data confidentiality are also key dimensions. The second challenge relates to the access conditions to central bank accounts for settlement purposes, which is currently restricted to entities subject to specific and stringent regulatory requirements. A wholesale CBDC could trigger a demand from other financial actors, which do not currently have access to central bank money, to become eligible to settle in CBDC in order to enhance their settlement. In a broader wholesale CBDC access scenario, even if these actors would be subject to similar regulatory requirements, the role of large banks in the settlement of transfer orders in central bank money would be challenged. Conversely, central banks may be confronted with the dilution of their control over the monetary policy transmission. Putting central bank money on the ledger for the purpose of settling payments is therefore not straightforward, but it could make a crucial contribution to the digitalization of financial markets, which calls for experiments. Therefore, since 2020, we at the Banque de France have launched an experimentation program with interested market participants to explore the risks and opportunities triggered by the availability of CBDC for clearing and settlement procedures of tokenized financial assets. Our ongoing program constitutes a tangible evidence of our support to innovation, as well as our willingness to take into account the needs of different stakeholders. 2 experiments have already been completed in 2020, and the remaining ones, there will be 8 of them, should end by this summer. This program has 3 singular features. First, the program follows a learning by doing approach as needed complement to the conceptual and economic considerations to help us acquire the necessary expertise and confidence to inform future decisions. Second, it takes place in a secure and controlled environment, verifying a proper enforcement of the existing regulation. In other words, it is not a sandbox. Third, it embarks a wide range of both domestic and international private partners around a variety of use cases over a wide array of asset classes with different technologies in a domestic as well as cross-border and cross-currency setup. Most of our experiments are still underway, but let me already share with you 4 main lessons learned at the current juncture. First, the wholesale CBDC could prove instrumental in improving the efficiency of cross-border payments. It is well known that there are numerous impediments and frictions that hamper their efficiency in terms of cost, delays, transparency, and accessibility. Experiments show that performing interbank payments on DLT could optimize reconciliation efforts and reporting costs for intermediaries and improve information flows. In particular, this opens an avenue to multi-CBDC arrangements formed by interoperable CBDCs in different jurisdictions that would mirror the current approach used to interoperate traditional payment systems, namely the correspondent banking model, but adapted to the technology supporting CBDC. The 3 arrangements identified by the BIS offer different levels of accessibility frameworks and degree of interoperability to mitigate cross-border and cross-currency frictions. The first offer compatibility between CBDC systems, the second, the interlinking of multi-CBDC systems, and the third, the integration of multi-CBDC into a single currency CBDC system. The Banque de France is currently experimenting these 3 arrangements, leveraging on successful pilot operationalizing interoperability between blockchains. But interoperability also calls for international cooperation. To commit to common technical standards, to revamp legal and policy frameworks, to mitigate macro financial implications on the international monetary system and global capital flows. Second lesson, while CBDC used for retail and wholesale payments are conceptually distinguished, there is actually a complementarity between the two. To support optimal circulation of a CBDC for retail payments in a domestic or a cross-border context, a wholesale CBDC arrangement is proven necessary. First, a wholesale CBDC, by minimizing cross-border frictions, improve retail payments by retroaction. Second, at domestic level, the issuance of a so-called all-purpose CBDC, which would cover both retail and wholesale uses and smoothen circulation between both, would minimize risk of deposit funding loss for the banking sector through ex-ante measures in its design, rather than rely solely on ex-post mechanisms. For instance, such a link could prove necessary to allow retail market participants to purchase or sell tokenized or not financial instruments, or to settle any subsequent cash flows. Third lesson, interoperability between conventional systems and DLT-based arrangements is required. All the new use cases refer to as to a decentralized finance raise the question of the safe and efficient coexistence of different types of architectures to support innovation while maintaining an integrated market for post-trade infrastructures and services. To this end, the Banque de France is testing the settlement of financial transactions using both securities collateralized in a centralized system and CBDC tokens issued on a DLT, relying on a conditional settlement procedure. Issuing a wholesale CBDC could also complement the current offer by making central bank money available to settle payment on a 24 hours, 7 days, 365 days a year basis, which would be particularly interesting when RTGS systems are closed. Decentralized finance and CBDCs will not substitute centralized systems overnight. Therefore, interoperability by design is key. Fourth and last lesson, the underlying technology of wholesale CBDC offers to central banks new ways to keep control over their settlement asset. In a centralized setup, only the central bank, as owner and operator of a system, exercises control over its settlement asset. The first experiments have shown that central banks do not have to be themselves operators of the DLT, and that owning a node and a smart contract could suffice for exercising an appropriate control over the settlement asset, even potentially located outside the central bank jurisdiction. The upcoming experiments will contribute to demonstrate how the risk of outsourcing the management of settlement accounts in central bank money, that the uses of distributed ledger to process and validate transactions might imply, can be mitigated. To this end, the Banque de France will analyze the usability of public blockchain technology, including from a safety perspective and determine whether such use would be pertinent or not. In conclusion, with the ongoing tokenization of financial markets and the emergence of new settlement assets, central banks must make sure they continue to safeguard financial stability and help leveraging technological progress for a more efficient financial system. To fulfill this dual mandate, there is a case for wholesale CBDC, which may not take preeminence over the case for retail CBDC, but which is related to it and which therefore calls for a thorough analysis of all its consequences. Banque de France is definitely engaged in this journey. Thank you for your attention.
Well, thank you very much indeed, Deputy Governor. An enormous amount there, and thank you for sharing so much with us. We have about 4 minutes left, which unfortunately is much less than we really need, and a whole host of questions. Two ones that are coming up, let me bundle them up. You've very much made the case for the advantages of a wholesale CBDC, both in improving the functioning of existing market infrastructures and for creating the possibilities of new ones in a whole range of domains. Question one, are you dependent upon the arrival of a retail CBDC euro to do this? Because I'm drawing the conclusions, the Banque de France, reading between the lines, has decided this is a good thing rather than a bad thing. So can we envisage a wholesale euro in advance of a retail one? And secondly, can we envisage that non-bank financial actors would be allowed access to central bank money? And if so, on what basis? Is it deposit an equivalent amount of gold, or will one continue with some form of fractional reserve banking?
Well, thank you, Phil, for these two questions. I think you can envisage having a wholesale CBDC, even if we were not to have a retail one. But my point, what I try to highlight, is that there are links between the two, and I think it's part of the our current investigations to really understand the links between the two, and to make sure that, for instance, if we were to launch a retail, the Eurosystem were to launch a retail, there would not be a need, or to make sure that it functions properly, we should not have also a wholesale dimension to it, and to which extent. But as a matter, conceptually, you can separate the two. From a pragmatic or operational perspective, there might be a necessity or an interest to have the two. To which extent, that remains to be investigated. That's part of the experiments which are contributing to. On your second point, I mean, I think it's one of the important policy issues associated to a CBDC, generally speaking, which is the access to central bank money, and in the wholesale space, I mean, our collective system has been built on the idea and practically on the fact that the access is restricted to mainly banking institutions for a number of reasons. There is a price to pay for that. I mean, in terms of regulation and supervision. So I don't think that there is a fundamental obstacle to extend the scope of institutions that may have access to central bank money in the wholesale space. But there are a number of conditions that should go with that access. And so I think this is an area of investigation.
It certainly is. And I look forward to exploring that with you in future conversations. I'm afraid our time is up this morning. Thank you very much indeed, Deputy Governor, for joining us. Thank you for a wonderful exploration. And as I say, I look forward to discussing this with you at length further. So I will now allow our team to move on to another session starting on DLT banking applications, hosted by my colleague Bhavin Patel. Thank you for joining us this morning. Thank you to Deputy Governor Denis Beau for a wonderful introduction to the day. Thank you.
Thank you.